The Canadian dollar, or loonie, is making headlines as it trades below 70 cents US, a steep drop that has many Canadians wondering, why is this happening and what does it mean for me?
The loonie is again trading below 70 cents US. That's the lowest point for the dollar in nearly 5 years.
The loonie dipped below 70 cents US. This is for the first time since the start of the COVID-19.
In this video, we'll explore the reasons behind the loonie's decline, how global and domestic factors are influencing its value, and what this means for everyday Canadians and the future of the economy. The primary driver of the loonie's decline is the strong US dollar. The US economy has been resilient, showing robust job growth and strong consumer spending, which allows the US Federal Reserve to maintain higher interest rates. Currently, the Fed's rate is 4.75%, compared to the Bank of Canada's 3.25%. This 125 basis point gap, the largest in 2 decades, makes U.S. investments more attractive to global investors. For Canadian retirees living part-time in the U.S., the weaker loonie means their savings don't go as far. A retiree who budgeted $1,000 US monthly for expenses now needs to exchange approximately 1,385 Canadian dollars instead of 1,350 Canadian dollars just a few months ago. A noticeable strain on fixed incomes. The Canadian economy has been struggling to gain momentum, with concerns over unemployment and slowing growth. The Bank of Canada has been aggressively cutting interest rates to stimulate the economy.
Lowered the policy interest rate by 50 basis points. This is our 5th consecutive decrease since June and brings our policy rate to 3.25%.
Everyday Canadians importing goods or shopping online from U.S. retailers are paying more. A laptop priced at $1,200 US now costs 1,662 Canadian dollars, compared to 1,620 Canadian dollars in September. Geopolitical tensions, such as the ongoing instability in the Middle East, have disrupted global oil markets. As a major oil exporting nation, Canada's economy is sensitive to oil price fluctuations. Lower global demand and uncertainty around oil prices have hurt Canada's revenue from this key sector. For workers in oil-dependent regions like Alberta, this means fewer job opportunities and increased economic uncertainty. Families relying on these jobs may face tighter budgets and reduced household spending. Canada's reliance on the U.S. as its primary trading partner leaves it vulnerable, but trade challenges with other partners exacerbate the issue. Sluggish demand from European and Asian markets for Canadian exports, such as lumber and agricultural products, reduces demand for the loonie. For Canadian farmers exporting wheat to Europe or Asia are seeing fewer orders, reducing their income and putting pressure on rural economies. This ripple effect can lead to reduced local spending and community investments. Canada's debt-to-GDP ratio has been rising, especially post-pandemic, standing at around 100%, compared to the U.S. at approximately 120%. While not as high as the U.S., the relative weakness in Canada's economic growth makes this debt harder to manage, creating doubts about the country's fiscal stability and putting pressure on the loonie. Higher debt levels could lead to reduced government spending on public services or infrastructure, affecting healthcare, education, and transportation services that Canadians rely on daily. Interest rate dynamics. If the Federal Reserve maintains its high rates, while the Bank of Canada continues cutting rates, the loonie could drop further. A potential US 65 cents value for the loonie may become a reality if the trend continues. The loonie's decline is a complex story, influenced by interest rate differentials, economic stagnation, geopolitical tensions, trade dynamics, and fiscal policies. For Canadians, it affects daily life in everything from shopping to travel to business operations. Looking ahead, the balance between domestic policy and global economic factors will play a pivotal role in shaping the loonie's future, If you found this video insightful, don't forget to like, share, and subscribe to stay updated on the latest financial trends